When you enter a trade, you have your initial profit target. But as the market goes, you want to adjust your profit target to make sure you maximize your profit and at the same time reduce your risk. Here's an example. Assume your profit target is 2 times of your risk. When you see this breakout, pull back, and then there's a bull bar here, so you can enter the market after this bull bar finishes. And then your stop is at the bottom of this bull bar, and then your risk is here. Then you measure 2 times of the risk to the top to see where your profit target is. And then your profit target is here. You can see that the market goes up and then you get your profit. As the market goes, you can see it didn't go up directly. Instead, it gives you a bear bar. And then it goes back up with this very strong trend bar. And you will notice that here is a double bottom at a smaller scale. So this is the pushback, go up, push back. So these 2 bars give you a double bottom. You will notice that this bull bar when you enter the market is very small. So when you do the target, it's not that very high. Instead, this bull bar is very strong, so other traders may enter at the top of this bull bar rather than this bull bar. So if that's the case, let's see what the profit target for them. So we do the same thing. We measure from the bottom of this bull bar here, and then measure at the top of this entry bar. You can see this is the risk. If that's the case, let's measure by 2 risks here. We can see this is the new profit target, target number 2. This target is a little bit more realistic, even between 1 and 2, because this risk, comparing to the first leg, it makes more sense. And this bull bar is very small, so the profit target might not be the ideal target for you. And then let's take a look at where the first target is. It is here. So you can see there's a big difference. So that means if you use the risk for this big bull bar, you're gonna take more profit. Another thing you will notice is that even we use 1 time of the risk here, like do a quick scalp. So this target is higher than target number 1 when you do the 2 times of this bull bar. This will give you some idea on adjusting the profit. So you need to have a look of your historical data and then do some back testing to see which way works better for you. In my previous video, I showed an example of adjusting profit target. Here is another one. Let's assume your target is 2 times of your risk. When you see this breakout, pulls back, if you take this bull bar as your signal bar and enter the market, so you can measure from the bottom as your stop out, the risk, and then the top of your entry. This is your risk. You measure up by 2 times of the risk, so you can see that basically here is your profit target. This profit target is hit by the market later on. As the market develops, you can see that here comes a pullback. So you have to think about this. Previously, the first leg, we have consecutive 5 bull bars here. However, for this leg up, 3 legs up, and then there's a pullback. This means the weakening of the trend. When you see this bull bar, so you may wonder, this is the first leg up, pullback, second leg up, pullback. Maybe there's a third leg up. So the second leg is smaller than the first leg. Seeing this bear bar as the pullback and then next bar as a bull bar as a signal bar, some other traders may expect there's another third leg up, so they will trade accordingly. So they will put their stop at the bottom of this pullback and then entry at the top of this signal bar. So they enter the market and they trade for 1 time of the risk for scalping. So if that's the case, we can measure up by 1 risk. Here you can see that this is actually their target for the profit. Then here comes the question. If there are a lot of other traders trading at this signal bar, they're gonna exit their position here at this level. That means there could be possible a pullback here. So your profit target might not be reached right away. Even though in this case, for sure it's reached in the end. But in some other cases, you have to think about that if the market didn't go up furthermore, and what should you do? Should you adjust your profit target to this target number 2? Let's put both profit target together. You can see that target 1 is higher than target 2. So that means target 2 has a higher probability than target 1 to be met. So at that point, when you see this small pullback, This means the weakening of the trade, you have to think about that whether you want to adjust your profit target. No matter which way, you have to meet your strategy.